The Coinbase and SEC news shocks the crypto industry, one day after the SEC decided to go after Binance. Of course, there is an industry-wide ripple effect happening right now. However, to cap it off, there is positive signs of adoption coming out from China. We discuss all of this and more in today's Collective Shift Weekly Recap. Actionable insights and a breakdown into the crypto market, all in under 30 minutes. As always, we'll start with the market update, followed by the big Binance news today. So Matt, take it away. What do the markets look like right now?
Crypto market last 7 days is relatively flat. We've seen Bitcoin up nearly 2%, ETH is down 3.5%, and some of these altcoins, particularly the one which we'll get to soon, the SEC alleged securities, those have really been significantly underperforming, to the downside, down double-digit percentages. In contrast, a bit of a story of the past 3 months or so. The traditional market or the stock markets have really continued to rally, whilst crypto has sort of trended sideways, if not going down. So that's a weakening correlation that we've continued to see week after week. We got the NASDAQ in the US, one of the 3 major stock indices in the US, is now up 7 weeks in a row. And all the while, crypto over that time is probably down. So BTC and ETH still up by about 50% or so year to date. But yeah, quite a bit of red, particularly in the altcoin market last week.
Yeah, we have seen some red in the market recently, but as we always say, and as I always say in Collective Shift, we're looking more so for the long term. You got to zoom out sometimes, right? That's how it is. But I guess we'll move on to kind of the big news that has been unfolding throughout the last the last week, actually, and even more so in the last couple of days as well. So Binance, there is a little bit of an update with Binance. It's getting a little bit messy, guys. Have you guys following it? Nick, Matt, I've been hearing some really troubling stuff coming out from Binance and coming out from the community.
Yeah, so essentially, I think we left on our last podcast that Binance had already been charged in this new suit by the SEC. So it's come out more about potential, how extreme this commingle of funds could be, with reports from the SEC and all of their filings putting a number of 12 billion, which is huge and substantially more than even the likes of FTX and Sam Bankman-Fried, was accused of potentially commingling. So I think the update in the last few days I've been seeing is that CZ and Binance have just come out and flat denied it, said that it's not true, but there is some concerns actually that I think they're thinking it's more severe than, otherwise they're leading it on, as they've actually hired, I think CZ's hired a criminal defense lawyer. So it's a lot of things heating up. And I'm really expecting a lot more fireworks in the coming, weeks to months.
I want to dissect that a little bit more. Matt, do you think if someone hires a criminal defense lawyer, do you think that is like cause for concern to say, I'm hiding something, I better protect myself to the maximum as I can? Do you think that's a good indicator?
I think so broadly. Yeah, it's hard to tell what their motives are, but I think that's generally just the most simplest take.
Yeah.
Or at least you're preparing for battle, or you're trying to get the best advice possible. So we saw, I think, four different attorneys, like really, well established or really, I suppose, reputable lawyers who have achieved a lot in their professional careers, file defenses today on behalf of Binance. And just as Nick said, probably just the start of what's going to be a long process that might even involve other agencies in the US.
Yeah, that's right. And even Nick, when you did talk about FTX as well, I am very concerned that this is going to be a lot bigger than FTX. The funds are nearly twice as much. I forget specifically how many billions was at FTX, but it is concerning, right? It is huge. What do you guys think would happen to Binance or would happen to the crypto industry if it does go down? Is Binance big enough to be like a black swan event? Do you think, Nick? What do you think? It's a black swan?
Well, I guess a black swan is something that is unknown. I guess is totally out of shock. So I wouldn't say this is actually a black swan, because a lot of people have sort of speculated about Binance in the past. But it would no doubt have set the industry back many years, and it would be as you said, they're much bigger in terms of their market share than FTX ever was, and they're ingrained in so many countries and such a critical part of the ecosystem. So if that does take a nasty turn like that, it's going to be a tough one, I think, for the industry.
Yeah, it'll be very, very tough for everyone on board. Even myself, I used to use Binance myself, so luckily all my funds are off Binance, so that's very good. And I hope we at Collective Shift always say remove your funds from the exchanges. But there is some further troubling news in the crypto industry. One day after the SEC went after Binance, the SEC also decided to go after Coinbase. Nick, this is very troubling again. Can you update us give us a brief on what's happening with the SEC and Coinbase?
Yeah, so as you said, a day after the SEC come out for Binance, they've come out and sued Coinbase, which this one is not too much of a shock, seeing as how they were issued sort of a Wells notice in the last couple of weeks, which was, them coming out and saying that we're planning some action and, we want a response from you before that. So they come out and sued Coinbase. I think the important part here is to acknowledge the differences between the two cases. So Binance entailed a lot of, I guess, accusations of not only operating a securities exchange and not abiding by, the correct laws in the US, but also, talking about commingling of funds and possible wash trading and manipulation. Whereas the Coinbase issue is really squarely on their staking programs, over offering securities, and basically just not having the correct licenses and not following the correct laws that the SEC say apply to crypto, exchanges. So that's a core distinction I'm seeing. And, they come out and named 13 assets on the platform that were considered crypto sort of asset securities. So this is a big one that I think everyone saw coming, but we'll have to see the fallout because there's no doubt going to take many years to play out in court.
Yeah, what I did hear in the community and in crypto as well, crypto Twitter as we all know it as, that this is a very deliberate action by the SEC going after the clean, kind of squeaky Coinbase after going after the dirty Binance to try and say oh, they're all dirty, they're all the same. Whereas there is a very big distinction, as you made, between the actual Binance suits and the Coinbase suits. And we all know Coinbase has been the kid in the front of the class with their hand up, with nerdy glasses on, trying to do what the teacher says, and the teacher's trying to just get all of them because they're all bad kids. And that's not what's going on at the moment. At least that's my perception of it, right? Yeah. So, Matt, do you have anything to add on to this SEC Coinbase Binance story? I know it's unraveling. We'll keep an eye on it. But yeah, any insight from you?
Yeah, more just, I think, as Nick said, two pretty different cases, like similar arguments in both. But then when you got Binance's, it's like a lot extra on top of that. So yeah, we'll see what plays out. Coinbase is really trying to get a lot of community support. It was interesting to see the price response, after the Binance news. A lot of the altcoins that were alleged securities sort of like really went down pretty hard. And then
that's right.
The whole market actually sort of rallied more or less at the very exact time when the Coinbase lawsuit came through, which was interesting to see. But yeah, nothing too much more as we see updates, going into the coming weeks.
Awesome. And we'll keep you guys updated. If you're watching on YouTube or you're listening on the Collective Shift platform, don't worry. If there's important news out there, we will get it out and find it for you. But we'll move on to Matt. There is some really positive adoption signs coming out from China. I know when we say China and we say adoption and crypto going together, it doesn't sound that reassuring. But I think there's some news there. Matt, what do you have to share with us?
Yeah, for sure. Just on those listings of the securities and whatnot, we'll get into that soon. For those of you wondering, whether the altcoins are affected, I'm looking forward to talking about how the actual market structures and whatnot are changing. But firstly, of course, some actual adoption news of the technology, which was always great. So the Bank of China's investment arm, BOCI is sort of the acronym there. They issued tokenized notes on actually the Ethereum mainnet itself. So yeah, the public Ethereum blockchain. That's a very important distinction with a lot of these sort of deals that are done on private versions of Ethereum. So this was significant because it was the first Chinese financial institution to issue a tokenized security in Hong Kong. So why would an entity even think to do this? A lot of the benefits or purported benefits have to do with efficiency gains. And then that would ultimately come back, if it is a tokenized security, that would ultimately come back in the form of maybe lower fees or lower management costs for, I suppose, the holders of those securities, which then, I suppose, ultimately would benefit them as opposed to, if they were using the traditional system. So yeah, more progress in that respect. But I think we saw earlier this year, the UBS, which I think is the main bank in Switzerland, they were a part of this sort of announcement, and we did see big news out of them earlier this year, which was, I think, in relation to using a private version of Ethereum. So they were a part of this one, in this one with BOCI. And yeah, more adoption of, I guess, tokenized assets on public blockchains such as Ethereum.
Yeah, it's very interesting that the Chinese government decides to go on a public blockchain. If anything, I would think they would be going private, right? Because that's kind of their motto. That's their way of governing. It's super interesting, and we did see UBS as well, and other countries kind of experimenting on the public Ethereum blockchain, which just goes to show, right? Ethereum is not going anywhere anytime soon. Lots of people love using it, and people are experimenting on it. So make sure you have a good allocation. Let's go and talk about some of the lawsuits that are coming out from the SEC. There are some tokens that you may have, that I may have, that a lot of people around the world probably do have, that have now been labeled securities. They're not they haven't gone after them specifically, but they have just gone out and said, hey, we think you guys are securities. That doesn't automatically make them securities, not yet. They still have to win the court case. But Matt or Nick, what's happening with these tokens? Do we have a list of them somewhere? I think we did last week. We touched on.
Yeah, I think we went through them in the Binance one. In the Coinbase suit the next day, the SEC alleged that another sort of list of 12 or so cryptocurrencies that they claimed were securities. A bunch of those were the same ones that they did in Binance. Some of them were different. And yeah, it's a very good point actually. You raised there, Leon, if they're alleging that Solana is a security, which the SEC did last week, it would be very different if they, sued the Solana Foundation, for example, and that the whole case was around whether the SOL token is a security. But interestingly, it's sort of bundled up into these fights against these exchanges, where the Solana Foundation can't even really come in and defend itself. Maybe another tactic or just another sort of interesting thing to note. But I suppose the really important thing that we've seen here, it was always some trepidation of whether exchanges, brokerages would delist these alleged securities, much like I think a lot of people were referencing December 2020 when SEC came after Ripple Labs and XRP was delisted by just about every exchange that touched the US. This time we saw the exchanges be a lot more defiant, I suppose, keeping them on the exchange. However, we've probably seen these sort of pseudo crypto platforms that are sort of, they're from the traditional, I suppose, financial services
background,
agent backgrounds. However, they do offer sort of tangential crypto services. So like Robinhood's a great example, SoFi, and then eToro as well, their US arm. So all of those three entities in recent days have announced that they will be delisting the cryptocurrencies that the SEC claimed or alleges are the cryptocurrencies that the SEC alleges are securities. So they include Solana, Polygon's Matic token, Cardano's ADA token. So the price reaction, as I said at the top of the show, has been a lot more to the downside for these sorts of tokens. And I think a bit of that has to do with fears over, will the likes of Kraken, Gemini, Coinbase, will they delist these tokens? And maybe there's some people who are a bit nervous that will happen and they're selling almost ahead of time. Personally, if I did hold some of these, I would be more nervous, if that did happen. I think these sort of three entities, it makes a bit more sense for them to do this because it's a lot more conservative approach. Some of them are publicly listed, such as Robinhood and SoFi. eToro might push to be publicly listed in the future, just want to be compliant. But the likes of Kraken, Gemini, isn't as much pressure on them, I think, to really follow the trend here. So I'd be more concerned if they did it, but so far, so good. I'm not sure if you saw anything else to do with that, Nick.
I think just the main point for me is this, the idea of just delistings is, this has significant impacts on the altcoin markets. If all of a sudden a lot of altcoins, or if a lot is labeled securities, then, that's probably the worst case event where you see mass delistings of, altcoins across the market, which no doubt would impact volume, access to them, and no doubt price. So I think it's an unfolding situation, and I don't think it'd be something. I think we'll see if it's really, really bad if we start to see a lot of mass delistings through a lot of these US exchanges.
And that's that chilling effect we often talk about. I think the Tornado Cash one was a great example of chilling effect hitting the industry, where I remember a lot of different entities were trying to, distance themselves from Tornado Cash because they didn't want to get in trouble, like from a legal standpoint. And then we've seen a similar sort of chilling effect here, where it's like, probably by the letter of the law, Robinhood does not need to delist them at the moment, but they're just sort of getting ahead of it because they're maybe very risk averse, and that's what their sort of in-house lawyers probably suggested. So that chilling effect is, again, another strategy that law enforcement can really, utilize, whether it's to do with crypto or other industries. So that's just another example of the chilling effect coming into play there. Probably the second one, just in relation to this, just quickly, is, as part of these delistings, you've seen, yes, the brokerages, platforms distance themselves by delisting, but then you've also seen sort of service providers. So market makers are a great example of, I suppose, entities that provide volume and market depth to the order books of centralized exchanges, just make the experience for people like us who are trading on these, buying and selling. We get a lot better prices when market makers are active. A lot of those entities, so Wintermute, Keyrock, for example, have in recent days withdrawn from, market making Binance US order books. Therefore, the experience for users left on those has been a lot more like price inefficiency. So the market depth, or basically just how to really dumb it down, just how liquid the exchange is, has fallen by nearly 80% since the SEC lawsuit was filed last week. So 80% for a whole exchange in 1 week is just massive. So again, unfortunate for the users there, but again, market makers doing what they believe is the right thing, even though maybe strictly speaking they don't need to right now.
Yeah, and I want to bring it back to the audience as well and say that this is happening in the US. Remember, crypto is a global phenomenon. We do cover the US a lot in Collective Shift because they are kind of like, the macro leaders. But remember, crypto, Solana, Bitcoin, it does live outside the US. And so we do see opportunities presenting themselves for these companies to go outside. For example, Hong Kong is offering Coinbase to become and be headquartered in headquartered in Hong Kong. It doesn't mean they'll do it, but hey, this might be enough to scare the US government and say, oh, we're losing all of these crypto businesses. Wintermute is going away. They're stopping market making. We got to do something. So yeah, it's just a battle. It's a back and forth of these entities. Thanks for the explanation on liquid provision, because in my mind as well, if you have a big pool, it's very easy to dive in. But if you have a really shallow pool and you dive in, you're going to break something. That's the way I think about it for liquidity. So yeah, you want a big pool so many people can jump in and swim around and everyone's good. And yeah, sorry for my really poor, explain it like I'm 5 analogies.
That was I'm going to use that.
All right, let's move on, guys. Let's talk about, let's bring it back to Australia. We've been talking about the US for a bit. We've talked about international for a bit, but Australia, something is happening in Australia with CommBank. They're starting to actually restrict certain payments to crypto exchanges. Now, we have seen this internationally as well, even in the US, but it's starting to come across to Australia here. And some of our members might be concerned about this. Don't be too concerned, right? Remember, banks are services. You can move your funds to another bank. You can use another bank very easily. So my question to you, Nick, do you think that CommBank restricting payments to crypto exchanges, is that a very big deal? Do you think it is a big deal?
So this one is, I guess, you can have a few different takes. So there is a legitimate reason why CommBank has, provided sort of limits to the amount of cryptocurrency you can move to different exchanges, mainly because scams are just so rife in the industry.
Yeah.
And unfortunately, there are time after time of people that are having their, cryptocurrency moved to exchanges that they didn't want to do, or, they've been scammed by a particular cryptocurrency or use a fraudulent exchange. So in this mind, unfortunately, it's not too much of a surprise, and it makes sense because obviously there's a need from CommBank to protect its customers from a liability perspective. But at the same time, it really depends on exactly which exchanges this targets. I was seeing some talk about quote unquote different legitimate exchanges that would be included. So it all depends on which exchanges are included with these limits, and exactly what the circumstances are. Whether it's a full blanket ban, then that would be more concerning. And so, yeah, for me, it just makes sense, unfortunately, that there are just too many scams going on at the moment. But hopefully we can there's a lot of other, I think, positive crypto banks out there.
Yeah, and that's the same thing with like Bitcoin, right? If arbitrage, you can go somewhere else. You can take your services somewhere else. Matt, do you think it's a big deal?
I'll say yes. I'll say yes, mainly because it's probably CommBank would have to be one of the largest.
What's one of the big four, isn't it?
Most innovative banks in the Southern Hemisphere. and definitely it's the biggest one by far in Australia. And I would say yes, just because if they are finding it too expensive to like monitor and follow up on customers, I was talking to someone the other day who had their funds frozen. Then the bank called them up and they had to explain why he was doing it. And then he started talking with the bank support team member, and then they were explaining just how like they're working around the clock, calling up customers to make sure that it is actually them sending it. And like, can you imagine how insanely expensive that would be? So if the largest bank in Australia is struggling to like even, manage to, pay for this, or they're just not happy with how much it's costing them, yes, it may be more younger, smaller, more innovative sort of banks, challenger banks might then, short term get a lot of inflow. But if that still, continues to cost them, probably similar to what we actually saw with the likes of, related back all the way to Silicon Valley Bank and Silvergate, where those smaller banks take on a lot more risk. They are a lot more vulnerable. If you then scale it out, they're a lot more vulnerable, I suppose, to the shortcomings of crypto, or I guess the extra risk you take on through the likes of more compliance costs and whatnot. So it's hard. I think it is a big deal, but I think I still would say it's unders. I would still say the public like overreacted to it. I don't think it was as bad as what a lot of people initially thought, but ultimately I would still say when I'm looking back at 2023, like this would still be like a big story.
Yeah, I would agree there as well. I do think it is slightly a big deal. Because crypto, we need fiat on-ramps. We need people to be easily able to get into crypto. Without that, you can't transact easily. And if you start taking away all of those ramps, then, we're not going to get to the next billion people. That's what I think. A big deal. Yeah. All right. So thanks for that, guys. Let's talk about some project news. As always, we at Collective Shift will try and keep you updated with anything that's we think is worthwhile knowing in crypto for specific projects. One of them is actually very spicy this week. We have Polygon. They're unveiling Polygon 2.0. There's a series of announcements that are going to be coming out over the coming weeks. But do you guys are updated on this at all?
Yeah, I had a look at this one this week, and I was really excited to see this announcement because it's something when I've been looking at a lot of these, Polygon's different solutions, a lot of the common question is where does Matic token fit in all of this and how does this all work together? So this is at heart of what Polygon 2.0 appears to be. It looks to unify a lot of its different solutions that it's sort of incubating. It's got, 5, 6, 7, 8 plus products out there and different solutions that you can use. So it's trying to, I think, make it feel like you're using the one chain and, the one experience to try and unify all this together. And it's going to talk a lot about, I guess, how the Matic token fits in. And I think it's a road to decentralization. So important dates to look out for here is, I think, the week of, late June to early July and to mid-July is when they're going to have a lot of this discussion around Polygon proof of stake, how everything will work together as one. And then in July, they're going to talk about the token and then how, I guess, governance will hold up in this new unified version of Polygon. So a lot to look forward to. Nothing specific with this announcement, but more so a series of, articles will come out in the coming months talking about where Polygon, I guess, fits in.
Yeah, I'm familiar with a whole bunch of the different products that Polygon are trying to release. There's a zero knowledge chain, and then there's a roll-up chain, and then there's another chain for lots of other stuff. So I guess I get the idea. They're trying to consolidate all of that into just one core user experience and you won't have to know which chain you're using, which wallet you're using. Just they're trying to onboard the next billion, as I say. That's good on them. I hope they succeed, right? I'm sure everyone hopes they succeed as well. Next up is Arbitrum as well. They did have a little incy-bincy accident. They did go offline, if I have it right, although they haven't gone offline as many times as Solana, am I right? A whole bunch of people keep remembering that. So Arbitrum did go down. I don't know too much about this. Matt, are you familiar with this topic?
Yeah, a bit. There was basically something to do, with their sequencer. I think people thought that it just like wasn't working for a different reason, but it turned out to be more just like a software-based bug, and they were able to patch it relatively quickly.
Yeah, it's up and running now.
Yeah, a high level, like no user funds were lost or even at risk the whole time. I think one thing is just another reminder, we probably don't say it enough, that this is all still pretty experimental technology, unproven. It's looking good in a lot of ways, but ultimately it's still unproven at a level that would be considered mass adoption. So these things happen. So always have that in your mind when you are considering, either using blockchain full stop, let alone these sort of, non-Bitcoin, non-Ethereum blockchains.
Yeah, I always have that in mind, and I always advocate for that for people when I see them dabbling in all of these. They will transfer so much funds into these weird side chains or second layers. And I'm like, guys, it's not safe yet. Like, you don't actually know that. It's not proven. Doesn't have a track record. And so, you can't be too upset if it starts to slow down or halts for a couple of hours here and there. You just can't be upset. All right. Yeah. Let's move on, my friends. Let's talk about, Matt, I think you have one thing that you might be looking forward to, or at least one thing you think the users or listeners should be looking forward to.
Yeah, I think this week's actually going to be, very, very significant. I think we've got, the latest CPI reading. So in the US, the latest inflation data that comes out every month, that'll be, that's coming out, in about Tuesday in the US time. Then we got the big one I'm sort of looking forward to, because I think it'll shape the week, is the court hearing in relation to the SEC is requesting what's called a TRO, temporary restraining order, against Binance US and maybe Binance Global, depending on the extent. They're basically asking the judge to be like, hey, things are really bad. Here's evidence why it's really bad. Can you just expedite your judgment to just freeze a bunch of these assets before we actually start the trial? If the judge approves that, I'd be my concern levels would be a lot more elevated than they currently are. And my suspicion, I guess everyone would be watching this after it happens anyway, but my suspicion would be that markets would take another step lower if the judge did approve the request for a TRO. So yeah, we'll see what happens there, but it's going to be a massive sort of 48 hours, a bunch of different economic data coming out this week as well. Then we've got these things called the Hinman emails, all the XRP army is getting up and about. That's to do with the Ripple Labs SEC battle that they've been going on for now 2.5 years. They've got a big release of data coming out this week. So yeah, never a dull day.
Jeez, I remember the XRP army when I got into crypto first in 2017. Good to know they're still around. Oh my God. These guys, they need to touch grass, man. Come on.
Yeah.
XRP army, the Link Marines. I don't remember what the synthetic warriors or something like Spartans. Oh man, we're so tribal.
Yeah.
Oh, dear Lord. All right, now let's move on to one of our last segments, my friends. Let's talk about rapid fire. Anything that we think was overappreciated or underappreciated in the markets in the last week. I'll go first, my friends. Mine was, I saw a news article which kind of took me by surprise a little bit. So this is actually happening in the UK, and the UK's they're called the Financial Conduct Authority, the FCA. From the 8th of October, they're going to be saying that whenever they're going to try and actually restrict NFTs and airdrops as a form of marketing, because we do know this is what some people do all the time. They're like, oh, hey, come and get this airdrop as a marketing tool, so you can come and use their chain, or come and use their service, or come and use their product, right? The UK are now trying to restrict this. They're going to be calling it, a restricted mass market investment, which is a big no-no in their book. They don't want you to do this anymore. They want to put an explicit big risk sign on there so you can actually know that, hey, this is really mass marketing to you, and don't fall for it. Well, that's a government trying to look after their constituents. So good on them. If it does well in the UK, they might not be getting any more airdrops, but and then you can still get airdrops around the world. So does it really matter? change your VPN. That's it. Yeah. So that's my small takeaway. I saw that and I was like, come on. Everyone likes a good airdrop here and there. I guess the tax system probably doesn't like airdrops because where's this money coming from? It's not real kind of thing.
Yeah, it's also tough because sometimes you encourage people to sign up or transact on shady websites that people may not know better than to do, and they might have their funds drained. So it's one of those catch-22s, I think, and it's just such a tough space with so many malicious actors out there.
Yeah. And I mean, I'm not against airdrops at all. I absolutely love airdrops. You give me one airdrop, I'll take it. But yes, some people, unfortunately, will go and sign a transaction that will approve all on their wallet, and then all of their funds are gone. And then, oh no, what do I do? Terrible space to be in. But Matt, what do you have, my friend? Do you have anything that you might be looking forward to? No.
I just had, my one would probably be about the CFTC versus Ooki DAO, which was a case that was happening in the last couple months into last year. Essentially that the US Commodities Future Trading Commission, they come out and tried to, successfully now have sued a DAO who is being accused of sort of running a commodities exchange essentially as a DAO. So this was an interesting case just because we don't really see many lawsuits against DAOs specifically. And this one was important because sort of Ooki DAO didn't even show up to defend itself. And so the CFTC won without needing to prove anything essentially. So this is just one to keep an eye on, and we may continue to see more DAOs potentially being targeted. And at this stage, the DAO members aren't personally liable for anything from the CFTC. But I feel like in the coming months, we could start to see DAOs and people who are members of DAOs potentially really question how that impacts them if all of a sudden they're attacked by the CFTC or the SEC.
I'm just as soon as you said that, in my mind, I'm thinking they're all waiting for the on-chain voting to finalize so that they can decide who goes to the court hearing. And like, oh no, the on-chain didn't go through. No one can go. Oh no. Yeah, and one thing about this Ooki DAO as well, when the DAO space and DAO governance started taking off, a whole bunch of people were like, a DAO can solve lots of different problems. You can have a corporate, it can replace an entire business. And then we're seeing all of that narrative kind of dying away now, where the government is actually going after these guys and they're winning because no one's actually turning up, just like in most of these DAOs. I think it's very interesting as to what's happened here. And I do think they will keep going after some other DAOs, some other prominent DAOs. I hope they don't win, but it's really hard to say,
Yeah, for sure. I think the one I think was underrated or overrated, this collection here on my screen, Sotheby's is auctioning off a lot of the seized assets from Three Arrows Capital. So it's a interesting way to do it, but I think they're trying to get
Tyler Hubs,
trying to get as much money, I suppose, for liquidators as possible, from my understanding. So Dmitry Cherniak's ringers here is estimated 2 to 3 million USD. They tend to do these estimates at the low range, so then on social media they can be like, oh look, this went up higher than estimates. So I think this will be, from an analyst or standpoint, even just, it'll be a nice temperature check, I think, for the NFT market, to see how much appetite there is still for some of these grails. I think they've actually used the term grails appropriately here, because these are probably some of the best, most coveted sort of NFT collections. So yeah, we'll see what happens there with this Sotheby's auction. I think it's happening this week, from my understanding.
That's so interesting. Thanks for sharing that, man. Yeah, I mean, NFTs, the narrative for NFTs have gone down. I think volume has significantly decreased. So we'll see it'll be a good temperature check to see if there's enough liquidity in the market for NFTs now, when they're worried about it being sued by the SEC. Who's going to collect the JPEGs online? Of course, they're not actually JPEGs. They're NFTs, guys. Calm down. It's okay. All right. So that does bring us to the end of this week's weekly recap, guys. That's a wrap for this week, of course. If you're looking for more insights, see our revamped weekly Collective Shift newsletter. It provides free market insights every Friday. Subscribe at collectiveshift.io/newsletter. collectiveshift.io/newsletter. We'll see you there very soon.